Hey everybody, welcome to the PlantStock channel. Hope you're doing good. Today I just wanted to give you a clip of a recent talk that I had with Mayur Thaker, who is an experienced research analyst at Sachs. He's been working with stocks and companies for about 15 years, so he normally knows what he's talking about. He's very interested in the PlantStock community and he's invested in Beyond Meat and Oatly, but also his largest investment, like me, is Tesla. But we thought it would be interesting to have a talk when it comes to Tattoo Chef, because that's a huge community here on YouTube, right? So I thought it would be fun to just take a little clip from that interview, because it was very long, it was over 1 hour, and I understand that most people maybe don't have that time, or that it would be kind of, offsetting if you see that it's that long. So this is just like I think about a 7 to 8 minute clip from that interview when we talk about what kind of stock price we could think about in the next 4 years in 2026. Now, whatever Mayur is talking about here, again, guys, this isn't a stock that he's followed very, deeply over the last 1.5 years, like many of us YouTubers who've been focusing on it. But so it's just a nuanced perspective from what he says. Doesn't mean it's going to happen, but it's, again, from his 15 years experience actually working with stocks full time, right? So how he looks at the business, what possibilities he sees. So just keep an open mind to what he talks about. Doesn't have to be the truth, right? But nuanced perspective is very important. All right, folks, before I let you see this clip, as always, if you want to help me out with a quick smashing of the like button, and if you haven't subscribed to the channel already, when it comes to hearing about Tattoo Chef, Beyond Meat, the Very Good Food Company, Oatly, to name a few, then, subscribe and don't forget that bell button. And if you want to be part of our free Discord channel, take a look in the description where we talk about these stocks on a daily basis, and you get five weekday morning briefings from me where I talk about these stocks and what's going on in the overall market. All right, guys, enjoy. Hope to see you soon, and peace out.
You look at the Google Trends anyways. I don't know if you can trust that with everything, of course, but if you look at Google Trends and just look at the food companies, and you look at Oatly, you look at Beyond Meat as brands, and they're extremely popular when you look at brands, how much they've grown over the last couple of years. And then you compare them to Tattoo Chef. What I've seen was a couple of months ago. Then Tattoo Chef barely registers, right, as a branded name. But then when you compare them to looking at YouTube and TTCF and OTLY and BYND, then off and on TTCF seems popular. So it seems like it's very popular as a stock. But just because a stock is popular among some investors on YouTube, it doesn't translate to more sales automatically, right? And I think it's important for people to understand that.
Yeah, exactly. And, and lastly, like, again, I think the company will do fine, right? They're actually guiding for profitability in the second half of 2023.
Yeah.
Which would be amazing, because even Beyond Meat has not guided for that. So that would be awesome if they can do that. But I think because Tattooed Chef is not differentiated in terms of margins.
Not yet.
Since they're not differentiated enough in terms of margins or in terms of, just the maximum size that they could one day become, they're not going to command a very high multiple. So even if they've achieved profitability, I think the multiple on those profits are going to be basically in line with the industry average, plus maybe a little bit more, because they have 20-30% growth. So I just did a little valuation exercise. As of today, the price is $11.55. The most recent shares outstanding is 82.15 million shares. They've got about 7 million in total debt. They've got 92 million in cash. So their enterprise value today is about $863 million. And their 2022 revenue guide is about $280 million.
Yeah.
And their gross margin guide is 10%. So they're trading at an enterprise value to gross profit multiple of 30 times right now, which is high. I mean, that's very high for a food company. Even if they're growing at 30-40%, that's still very high. I've been talking about this for some time now, but I believe, because we've lived through this incredible bubble period in stocks, the multiples that we saw in 2020 and 2021 are not going to be sustainable. That's why we've seen Beyond Meat, crash. We've seen Oatly crash. We've seen countless other stocks crash. Basically, the entire ARK ETF, all the companies within that, like Teladoc and Roku and everybody, not just plant-based companies, but all companies that had high growth rates and achieved very high multiples, they've all come down. And I think there's still a lot of downside for Tattooed Chef, just because this multiple of 30 times enterprise value to gross profit is very high for a food company, unless if you're growing at 70-80%, right? Maybe more than that. Yeah. And they're not growing at those rates. So, to me, this is telling me that, the growth is good, but they're not going to grow. They're not going to command a significant market share of the total plant-based food market, because they're one among many players within the market.
Right.
So I see the multiple, contracting to 8 times. So even if you were to, grow their, 2022 revenue guide by 30% per year for 4 years, by 2025, you could see them generating $800 million of revenue, versus 280 this year. And even if you believe them on their 25% gross profit margin, I think that the multiple will ultimately converge down to an 8 times, multiple on EV to GP. That gives you a 2025 enterprise value of roughly 1.6 billion. So that's about an 85% return from today's price. And that's assuming a lot of execution. That's assuming 30% growth for 4 years straight, and getting to that 25% gross margin.
So that's not even a doubling of the current stock price, and not that long ago it was up at around $25. It's been up to 28, 29, and that's years away from now, basically, in your understanding of the company. Yeah,
exactly. Remember, Oatly right now trades at roughly 9 times gross profit. So, we're talking about Oatly, which has had 50% growth, and are continuing to have 50% growth, going forward. They're building total of 9 factories globally, and are going to get to gross margins of 40% in the next 2 to 3 years, right? So, a much stronger company with a much stronger brand recognition.
And much older. It's 3 decades old.
Yeah, exactly. And they're getting a multiple of 9. So, 8 could be even high for Tattooed Chef. It might come down to 6. If it does, then, the returns are just not that, great. So you would really need to see just incredible growth to be able to justify today's valuation and earn a decent return on your investment.
Yeah.
So if I were to change this estimate to 50% growth, that would start to make sense, right? You'd be looking at basically a tripling from the current price in the next 4 years.
Yeah.
Can they grow at 50% every year for the next 4 years? Maybe. I don't think. I don't know. So these are just questions that I would pose to the audience. Do you think that if they can grow at 50%, then you might triple your money in the next 4 to 5 years?
Which is not bad. And even when you think about it, it's maybe this whole YouTube era of investing in stocks. So many of us are like, I had to change my mind also because I'm a fairly new investor myself. I've only been doing this for a couple of years, and the more books I read, the more you and I talk, and I talk to other investors on a regular basis now who've been doing this for 20, 30 years. And I realized this, 5xing or 10xing in a few years, it's extremely rare. And not every company is a Tesla. And if that's going to be a possibility, you definitely have to be, you have to have a moat. You have to have something different, and you have to have a lot of R&D behind it, probably, and a lot of possibility. And you have to be able to reach some form of economy of scale and have facilities everywhere, basically. And then you have to be profitable, usually quite early on. If you look at the 100 baggers, a lot of people have been talking about 100 baggers and relating it to Tattoo Chef. And in many ways, a lot of our companies that we talk about today, they aren't actually the role model for 100 baggers at the moment, or not even 10 baggers. So we have to realize, if it is that they actually grow 85% in stock price in 3-4 years, realistically, that's not a bad deal when you think about it. So, but if that's not what you're looking for, obviously you need to rethink your idea. But this, obviously, guys, I want you to understand, we're just trying to talk about another picture that might have been portrayed regarding Tattoo Chef, and just having a nuanced perspective, right? I think it's important to just think about that.